When China tells its banks to cut back on U.S. Treasuries, global finance feels the tremor. Bitcoin dropped below $70,000 as risk appetite shrank, and the crypto market saw a 2.75% slide in total value. The Fear and Greed Index plunged to extreme fear, with futures open interest falling sharply, highlighting the impact of geopolitical moves on digital assets. XRP just faced a massive price drop, and 4 leading AIs now warn the worst may not be over. ChatGPT and Perplexity see a possible fall to 85 cents to 95 cents, while Gemini warns that breaking $1 support could push XRP down to 60 cents. Grok notes, a rebound is possible only if $1.10 holds, but further losses loom if support fails. Bitcoin's drop below $70,000 is now attracting major institutional investors, signaling a shift in market power. Bitwise CEO notes that while long-term holders are uneasy after a 22% correction, institutions see this as a rare entry point. Despite volatility, strong inflows into funds and ETFs, plus rising retail interest, suggest this is a major repositioning, not a collapse. Lighter's perpetual futures volume just smashed a $7.53 billion daily record, pushing a 13% rally for LIT. Retail traders jumped in, but whales kept selling, so LIT's price stayed stuck between $1.40 and $2.04. Unless LIT breaks above $2.04, whales will keep steering the market, and the uptrend could stall. When Bitcoin dropped nearly 33% in just 72 hours, over $1 billion in forced liquidations exposed the fragility of crypto leverage. Aave's new stress test engine processed $4.65 billion in liquidations, turning volatility into $13.17 million protocol yield, and showing how DeFi adapts under pressure. This marks a shift from pure loss to sustainable revenue for decentralized lending platforms. ARK Invest just sold $22 million in Coinbase shares and ramped up its bullish holdings, signaling a major shift in crypto strategy. The move came as both stocks saw price swings, with Coinbase up 13% and Bullish up 10%, despite weak year-to-date performance. ARK's flagship ETFs now reflect a new focus, as recent filings show reduced exposure to Coinbase and increased bets on Bullish. A massive $400 million USDT transfer from HTX to Aave is shaking up the DeFi landscape. This strategic move boosts Aave's liquidity and hints at institutional players targeting decentralized finance for higher yields. Analysts expect ripple effects on stablecoin usage, interest rates, and cross-platform capital flows as DeFi matures. Hundreds of users at South Korea's Bithumb exchange received billions in Bitcoin by accident, sparking a 17% price crash and urgent asset recovery. The firm quickly reversed 99.7% of the $44 billion error, but regulators warned this highlights major vulnerabilities in crypto asset management. South Korean authorities are now investigating, and Bithumb plans to improve its verification systems to prevent future mishaps. Tether has frozen $3.4 billion in USDT, marking a pivotal moment for global crypto compliance. Coordinated with authorities from 62 countries, this action targets wallets linked to criminal activity and signals a shift toward stricter stablecoin oversight. For most users, the impact is minimal, but the move highlights the centralized control of USDT and sets a precedent for other stablecoin issuers. The US and India just signed a trade deal that could reshape digital payments between the two giants. Tariffs are lowered, and India commits to buying $500 billion in US goods. But the real game changer is using stablecoins and DeFi protocols for cross-border settlements. This move is expected to boost crypto liquidity, open up new markets, and make blockchain-based payments mainstream for global trade. A single wallet just moved 199 BTC, worth about $288 million to Binance, sparking intense market scrutiny. Analysts note, such large transfers often signal potential price volatility or strategic portfolio shifts. The true impact depends on whether the whale sells, uses BTC as collateral, or simply rebalances holdings, making this event a key indicator for market sentiment. Hyperliquid just removed over 2.32 million HYPE tokens from circulation, tightening supply and fueling price strength. The protocol's daily fees hit $5.5 million, outpacing Ethereum and Tron, while HIP-3 trading volume soared to $5.21 billion. As market volatility shakes major coins, HYPE's price stability and Hyperliquid's expanding on-chain perps share signal rising adoption and robust demand.